Good morning, Euros. Well, what a little monkey. We got short on the bounce up to here, and I covered it at 21.04, at 21.09 as well. So, this morning we're lower. We're currently trading at 20.74. I've got this around here at 20.64, both from a trend line I drew in and the 38.2 fib. Now remember, the last time we were down here, we broke and we went down to 1952. So we are in a weaker position, I think, with the euro. You wouldn't have thought that yesterday morning, but we bit the bullet and sold at the highs, and the rest is history. So what are we going to do today? Well, at the moment, the market, I think, is poised to puke. I've said this to you. I've told you how long I've been long of the dollar index, waiting for this move to happen. And we have been playing around in the currencies, doing a bits and bobs, and we've done well. We've had a good February so far. But the market, I think, is due to go lower. I just feel, and have done, for a good couple of months now, that the dollar's undervalued, and I just see dollar strength. I do see it coming. The dollar index I love, and obviously you don't want to be trading the euro without looking at the dollar index. So you've got to use these two. They are mirror images of each other. I said to you the other day, unless we took out this down here, we'd bounce. And we didn't take it out. And we bounced. And we've gone above the 9 and the 21-day moving average. And there is absolutely nothing to stop us going higher. If you look at that pattern, that basing pattern, you're seeing the same, but the mirror image in the euro, which you're not probably looking at other markets, because it doesn't work so well if you're trading dollar yen, for example, against it. But if you see that those stochastics have turned bullish, you see our RSIs pointing up, you go back to the euro, there's your topping pattern. It is a mirror image. So obviously many more people trade the euro than what they do the dollar index, but you need to keep your eye on both of these markets. If you're trading euros, you're looking at the dollar index. So that's just one little point. Let's have a look and see about what it's doing against the other currencies. If we look at euro sterling, it's not looking great, and it's really not looking very well at all. We are extremely oversold. We're below my 10% parameter oversold. We're at 3.94 and 7%, but at the moment that's not turning, so we need to look a little bit longer term. Where's a good place for euro sterling to go down to? 86.93 looks about average. If we take that out, then obviously euro sterling goes lower. It's just the way that markets react. Euro Swiss not doing anything, so we don't touch it. Why would we? Euro CAD, we're right on that trend line in Euro CAD. The stochastics are oversold, but they're still pointing lower. So you need to be aware of these other currency correlations, because if you're not seeing the bigger picture. Euro yen, up to the races. However, look at what euro yen is up against. If you scroll out to this area here, you can see that at 128.69, you've got the 61.8 Fibonacci level from 2018. Yes, okay, they do seem to be wide, but you're just looking at directions. Look at the way the market is overbought and turning lower. That's another signal that the euro isn't going to go much further. Yesterday, euro yen had a real wiggle on, and it was the weakness of the yen, I think, more than the strength of the euro, because they both went down. It's just dollar yen went higher than the euro dollar went lower. It's really that simple once you get your head around it. So look at these different currencies. They really, really will help you to make an informed decision on your major currencies. See what ones are working best. See what ones are looking to have the best opportunities. You know, in hindsight, we should maybe have kept the short euro dollar position from yesterday. But you know what? No one wants to be greedy. I had a target on the downside, and that was it. You know, we did dip below 121, but once we come roaring back, out, cover, look again. And that will be the same for today. You know, we look again. You've got your 55-day moving average coming in at 121.49. If it bounces off 120.63, you may well get another move up towards those higher levels where you can go short again. If not, your break point is down below here. You know, if we go below 120.45-43, it's going to come down and test this area here. Its markets are predictable to an extent, but traders will always go for the most obvious level. They want to go, they don't, you know, we don't have time, I suppose, to actually think about why it's doing it, just how it's doing it. So if you can see something like this where the market is overbought, you see what it's like against the other currencies, there's no reason not to join in and be a seller. There isn't, but you always do it on the second go, never the first. So if euro dollar breaks that 120.64 to 47 area, you don't want to be caught up in the noise of the stops. It should then bounce back to the break point, sell it again. Okay, good luck. I will catch you all later.